Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ in association with M-Stock by Mirae Asset. If you have joined us for the first time in the day today, clearly there is no Santo again. Today he's recovering still from ill health, so he will be back soon. But till then you have me, and let's just jump right into it. It's been a great session for the Bulls. Clearly they have won the boxing match, it seems, through a technical knockout this week. I mean, the entire week was quite volatile, but it looks like we are going to be ending on a high for the Bulls at this point of time. If you look at the Nifty and Sensex, both are looking to end the week on a positive note, buoyed by largely global cues, very positive global cues from the Asian markets as well as US stock futures. The small and mid cap space also have seen quite a jump in sentiment after the sort of capitulation we saw in Monday. They are going to end the week on a positive note with weekly gains. So clearly there has been some recuperation in sentiment in the broader market as well. Largely, if you look at the US stock futures as well, they are also indicating a good start for Wall Street later in the night. So overall, global equities are doing well. The risk appetite is improving quite considerably after what we saw last week and probably even earlier this week as well. But the key question is that, a lot of the gains today also are coming on the back of low volumes. If you look at the average daily turnover for today, it's considerably lower than what we have seen in past few sessions. So clearly, the buying is coming, but it's not coming at very, very high volumes, and that could beg the question whether this sort of a bounce back that we are seeing in the market, whether it's sustainable or not. Now, in my opinion, I think it could be sustainable heading into next week when the monthly expiry of June derivative series will happen on Thursday. The key hurdle, of course, would be the 15,800 mark for the bulls. At this point of time, that is one of the key strike prices on the call side, which has the highest open interest. And if we can cross that hurdle, clearly the bulls then will be aiming for the 16,000 mark. If you look at today's session, a lot of traders were building long positions on the 16,000 call option strike price of the Nifty 50. So clearly there is optimism among traders, although you could also flip the argument and say that the call writers are also not expecting the market to go beyond 16,000 or maybe even 15,800 going ahead. So it will be a tussle again next week, although it is not a data heavy week, so probably there will be some relief for investors on that regard. But clearly we are setting up for a very, very interesting expiry next week. That's it. There were a lot of stocks that were in action during the session. Let's get to them one by one. We have 5 stocks on our list, starting off with Hindalco. Well, the stock clearly saw some buying momentum again today, largely thanks to some bargain hunting by investors. Although the only point of concern would be that the buying has been coming on low volume. So clearly the conviction is still not there on the counter. And why would it be there? I mean, the stock is down, what, 50% from its recent high. So a lot of sentiment has been hit or hurt by what has happened in the past few weeks and months on this counter. But if you look at from a valuation perspective, according to certain brokerages, the stock is right now available probably at the lowest valuation that it has in the past 10 years. The 4 times enterprise value to EBITDA ratio, or the valuation metric of Hindalco for the 1 year forward EBITDA, is the lowest in the past decade. So clearly the correction has meant that their valuations have become quite reasonable on this counter. If you look at what Centrum Broking had to say, they believe that the negatives for the company have been priced into the stock, and at this point of time, the aluminium side of the business is clearly looking quite robust. The fundamentals there are looking quite robust, and they do not expect global aluminium prices to go beyond the go below the $2,500 per ton mark. So at this point of time, Centrum seems quite optimistic. They have retained their buy rating on the stock, and they're expecting almost a 50% upside in the stock over the next 12 months. So maybe, if you're a contrarian investor and have a large risk appetite, now would be the time to bottom fish on this counter. The next stock on my list is a micro cap stock called Menin Bearings. Now, why the stock is on my list? Well, because I feel that this could be a proxy, to the upswing that we are seeing, the cyclical upswing we are seeing in auto volumes, and we are expected to see in the coming months. The stock rose today on the back of optimism for FY23 earnings. As I mentioned, that market is expecting auto sector to do well. And with that, an auto ancillary company like Menin Bearings could could do reasonably well along with it. Now, what could be driving demand for them? Well, the revival in this commercial vehicle space as well as the passenger car space in FY23 could be a driver for growth in a lot of engineering components that Menin Bearing has manufacturing capacity in. So clearly, there is a potential for upside on the volume side and on the earnings side for the company. Now, Sushil Finance believes that excuse me, Sushil Finance believes that the profitability of the company as well as the dividend payout recently has been quite strong, and that goes to show that if earnings momentum also improves, then investors could be in for larger doleouts from the management. The brokerage has initiated coverage on the stock with the buy rating, and at this point of time is expecting an upside of as much as 32% over the next 12 months. So clearly, another stock in a sector which is seeing a lot of buying momentum. Even today, if you look at today's session, automobile stock were one of the preferred sectors. So one thing, another stock to really watch out for. Next stock on my list is, well, from the newish tech space. Now, this stock has not performed very great today. It's been largely flat in the session, but it held a investors day meeting recently, and I'm talking about Nykaa here. In the meeting with analysts, with investors, they suggested that they expect the beauty and personal care segment to continue to provide healthy growth, with the personal care segment itself probably outperforming the entire company's growth. Apart from that, if you look at what Kotak Equities had to say, they had retained their positive view on the stock. However, they have trimmed the price target largely because the new ventures that Nykaa is getting into, they are likely to probably see more losses going ahead, especially the B2B business that Nykaa is trying to get into. That could see more losses, and that's why Kotak believes that there could be some headwinds in the near term. But in the longer term, the brokerage expects these segment to turn profitable maybe from FY25 onwards, and that could be a good kicker for growth of the company. Now, as I mentioned, the B2B segment is where the concerns are at this point of time. But even if you take that fact aside, brokerages like Kotak are expecting more than 4 times growth in net profit in FY23 itself, and probably about 122% growth in net profit in FY24. So clearly, the growth trajectory is still there. Valuations, as we all know, have moderated a lot given the sort of correction that a stock like Nykaa has taken within the new age tech space. So probably something for long-term investors to watch out for in the coming sessions and weeks. The next stock, well, this is one of the performers of the day today, Route Mobile. The stock has surged, 19% in the past 2 trading sessions, largely on the back of the announcement that came in from the company that they will be considering a buyback offer very soon. Now, with the buyback offer now on the table, it seems like the bullish momentum could continue in the coming few weeks as we head towards the record date for the buyback. Mind you, they have not yet told us what would be the buyback price or how much quantum of shares they'll be buying. So clearly that is one risk factor. If the premium on the buyback price is disappointing, we could see the stock going down. But if the premium meets expectations or is above expectation, then the stock could shoot even higher in the coming sessions. So from a tactical point of view, this stock looks quite encouraging at this point of time. Also, let me remind you, from a valuation perspective as well, the stock is down about 28% this year. There has been a very meaningful and deep correction in the valuation as well as the stock price. So clearly, if investors are trying to play a tactical game ahead of the buyback for the stock, this could be one that could make money for traders and investors out there. Lastly, the last stock on my counter today is Maruti Suzuki. Well, I know that the market is quite buoyant about the prospects for Maruti Suzuki. We have known, we know that brokerages are coming out with report after report suggesting how auto sales are going to recover, how passenger car segment could recover, and Maruti within that segment could be an outperformer because finally, after 3-4 years, the company has a very, very strong launch pipeline. It could, win back a lot of its market share. But you know me, I mean, even recently when we were talking about this stock, when Santo had listed it in his preferred picks, I had said that I am a little doubtful about Maruti Suzuki being able to recoup a lot of the market share it has lost to the likes of Tata Motors and others over the past 3 to 4 years. Now, JP Morgan India as well today has come out with a note suggesting that they don't expect a very meaningful gains in market share for the company despite the new products that they are launching, especially in the SUV space. Now, SUV space has been one segment of the automobile market that has seen tremendous growth over the past 1.5, 2 years. And in that space, Maruti lags behind peers like Tata Motors and others. So clearly, it's going to be a big challenge for Maruti to win the hearts and minds of a lot of very finicky customers out there in the SUV space. So this is something that JP Morgan also believes that could be very hard for the company. Apart from that, they also have suggested that high competition in the sector could be to the detriment of Maruti Suzuki, because that will probably keep margins under pressure. Now we know there is another side to this argument to this thing that commodity prices are softening, steel prices are coming down because of recent government action, and that could be a kicker for margins in the near term. But let's not also forget that there is competition in the sort of segments that Maruti is trying to get in. And if it wants to gain market share, if it wants to win hearts and minds of consumers out there, it probably will have to price its product quite attractively, and that could create a competitive environment within the SUV segment going ahead. So clearly, margin is something that a lot of analysts feel that could be under risk going ahead. And lastly, JP Morgan has expressed this concern that not only in the the premium market where Maruti has lost market share, and probably even the entry level segment where they have lost market share, but now even the CNG and the rural market is something that JP Morgan is concerned the company could lose market share there. A lot of rivals of Maruti are trying to get a footprint into the CNG space, which is expected to do quite well given the sort of government measures that we are and the impetus that the government is trying to put into cleaner environment, cleaner air. So clearly, CNG sales are expected to do well, but within that, there could be more competition going ahead for Maruti, and that is another reason why I am a little skeptical on the stock, even though if you look at the stock right now, it has bounced back from the days of the low and will probably end the session in the green. So those were my stock list. Before we move on, let's take a quick status check on the market. If you look at the market in general, we are doing quite well. We are near the day's high. The Nifty is higher by about 0.9%, with you see stocks like, it's the auto sector day today. M&M, Hero MotoCorp are the two top gainers on the Nifty 50, higher by about 3.5% and 4.5% each. Apart from that, you look at IndusInd Bank, Bajaj Finance and HUL rounding off the top gainers for the day. On the top losers side, Tech Mahindra, surprisingly, IT has taken a beating today despite the sort of commentary that we saw from Accenture and the sort of earnings that the IT behemoth posted for its own Q3. Clearly, investors are not biting that as of now. They're still very skeptical on the growth prospects for the IT sector. Apart from that, the mid-cap space was really, really healthy today. Gains of about 1.5% for the Nifty Mid-Cap 100 index, led by some of the chemical names and financial names on that index. And if you look at the small cap index, higher by around 1.8%. So closing of the day near the day's high for the mid and small cap, as well as the large cap index Nifty 50. So a good day for the bulls, a great week overall also, because we are going to end the week with weekly gains. So let's hope that this continues next week. But that said, on the horizon for me next week, there'll be a few data points that I'll be watching out. First off would be the US home sales or new home sales data that will come later in the evening. Now, why this data is important? Because the property market has been one of the biggest drivers for the US. And if you see interest rates rising in the economy, this is one market where you will see the hit foremost. And how the sentiment of consumers in the residential property market is changing in the US. There were already been reports that multi-decade high or multi-year high mortgage rates in the US are already hurting demand sentiment there. So clearly it will be interesting to see how the new home sales pan out, and probably that could add to the narrative of a impending recession in the US in the coming 12 to 18 months. Apart from that, well, at home we will have the June auto sales data coming in from the 1st of July. So clearly another metric that will be very important for the automobile stocks out there, and a lot of investors who have taken up investments in the auto space recently. Whether the demand momentum will continue from May or not, it will be crucial to see, and that data point will give us that indication. Lastly, we had the expiry of the June derivative series. Now, in the past few series, we have seen that, as we head towards the close of the expiry or the series, we tend to see some bit of short covering. We saw it in last month when the May expiry was ending or the May derivative series were ending. We saw bit of short covering the last two sessions of the expiry. So clearly this time around also, given that there have been a lot of short positions being added by foreign investors in the Nifty 50 and the Nifty Bank, we could be in for some short covering on Wednesday and Thursday. So something to watch out for all the traders out there. So those will be the three things that I'll be watching out for. With that, it's a wrap on this episode of Markets with Santo and CJ. I don't have to say it to you. Please keep posting your feedback on the comment section below and keep following us on the social media links that you can see at the bottom of your screen. I hope that you have a great weekend. Rest well and hopefully be ready, be prepared for a very good opening on Monday morning. Till then, have a great last 15 minutes of trade that we have left, and I will catch you again Monday morning 9 a.m. sharp. And for rest of your news, stay tuned to Moneycontrol and download the Moneycontrol app and stay tuned to the moneycontrol.com.